Hello. Okay, guys, shall we start? Sometimes I feel that I am only talking to myself. Yes, no? Yes. No problem. Okay. Now, question number 7. Shall we start? Mr. Suraj, a proprietor, commenced business of new 3-star hotel in Madurai, Tamil Nadu, on 1st of April 2025. First of all, Suraj is a proprietor and he has started the operation. He has commenced the operations of business of a new 3-star hotel in Madurai. Can I say new 3-star hotel is a business? Which business? Don't talk. Is a business. Which business? Specified business. Why specified business? Because 3-star hotel is a hotel. Any hotel of 2-star or above category is specified business. And on 1st of April 2025, the business was started. Meaning this year the business has commenced the operations. He incurred capital expenditure of how much? 50 lakh during the period January 25 to March 25, exclusively for the above business, and capitalized the same in his books of accounts. Meaning that this capital expenditure was incurred prior to the commencement of business. Prior to commencement of business means it is a pre-commencement expenditure, and for that the expenditure is also capitalized in the books, meaning that this expenditure will also be eligible for deduction under section 35AD. Now, further, during the previous year 25-26, he incurred capital expenditure of during the previous year 25-26 also, meaning this year after the commencement of business, capital expenditure of 2 crores, out of which 1.5 crore was for acquisition of land. So 1.5 crore will not be eligible. Remaining 50 lakhs will be eligible. Compute the income under the head. They are telling you to compute the income under the head PGBP. Okay. For the assessment year 26-27, assuming that he has fulfilled all the conditions specified under section 35AD and opted for claiming deduction under section 35AD, and he has not claimed any deduction under chapter 6A under part C. He has exercised the option of shifting out of the default tax regime provided under 115 BSE. The profits from the business of running this hotel before claiming deduction under section 35AD is how much? 25 lakhs. Assume that he has also another existing business of running a 4-star hotel in Coimbatore, which commenced operation 15 years back. The profits from which are 120 lakhs for the assessment year 26-27. Also assume that payments for capital expenditure were made by net banking. Now, how are you going to calculate the PGBP income? What will be the PGBP income? Simple. 120 lakhs is the income of Coimbatore business, and 25 lakhs is the income of Madurai business. Two businesses are there: hotel in Coimbatore, hotel in Madurai. So Coimbatore business is having a profit of 120 lakhs and Madurai business is having a profit of 25 lakhs. But 25 lakhs is before claiming the deduction under section 35AD. And for one business, you are eligible to get what? You are eligible to get deduction under section 35AD. And for that Coimbatore business, you are not eligible to get 35AD deduction. Why? Because the operations of Coimbatore business were commenced 15 years back, meaning prior to 1st April 2010, meaning date which is specified for commencement of operations. Before that date, the operations were commenced. So can I say you have two businesses? How many businesses, sir? Two businesses. One is 3-star hotel in 3-star hotel in Madurai, no? Madurai. And another is 4-star hotel in Coimbatore. Now first thing what I am going to write here is, for this business, deduction under section 35 AD is available or not available? Is available. And for this business, the deduction under 35 AD will not be available. Why not be available? I'll write the reason why 35 AD is available and why 35 AD not available. Tell me. Operations, meaning commencement, commenced in commenced on 1/4/2025, that is on or after specified date, and since it was commenced both of you, madam, last bench, come on the first bench, come here. Commenced 15 years back. That is prior to specified date. Now for both of this business, profits are given, no? Profit as given. For this business, 25 lakhs. And for another business, 120 lakhs. Less what? Deduction under section 35 AD for capital expenditure. From here, how much capital expenditure is available? Pre-commencement was how much? 50 lakhs. And post-commencement? 2 crores. But out of that, 1 crore 50 lakh is land. So, only 50 lakhs will be considered. Yes or no? So, 50 plus 50? 1 crore, no? 50 plus 50? 1 crore. How did you get it? Out of, see, this is 50 lakhs. This is pre-commencement. Plus 2 crores, which was post, minus 1 crore 50 lakhs, which was cost of land, which cannot be claimed. Done, sir? So the total is 1 crore. And here you are not going to get any deduction. So here there will be a loss of 75 lakhs. And here you will have a final profit of 1 crore 20 lakhs. Now my question is, Simple question, pay attention. My question is, will you be able to set off this loss against this profit? Why? Both are specified, but wait. You are setting off a loss of a specified business against the loss of profit of another specified business, but another specified business is not eligible for 35D deduction. Understanding? So the business against whose profit you are trying to set off this loss, that business was not eligible for 35D deduction. Can you still set off this loss? The answer is yes. There is no requirement that the specified business against which you want to set off the loss, from that business also you should be getting the deduction of 35 AD. It is not required. Any loss of specified business can be set off against profit of any specified business, whether that specified business is eligible for 35 AD deduction or not. Will not make any difference. Yes or no? So you can very well set off this loss against 1 crore 20 lakhs. So now what will be your final figure? 45 lakhs, and this is the taxable income under the head PGBP. And one note we are going to write. Did you copy this? Okay. Now what note we are going to write? Write down the note. I am dictating. Copied, no? Write down. The loss of any specified business can be set off only against the profits of any other specified business. Any other specified business. Full stop. It is not necessary that the profit against which profit of the specified business, against which the loss is being loss of another business, another specified business, against which the loss of another specified business being set off is also eligible for 35D deduction. Done? So this was your question 7. Okay. Next one. See how big question was there and how easy the solution is. Okay. Next one. Question number 8. I gave you this also for homework, no? Did you do this? Huh? Or no? Start. Start solving. You were not there, no, yesterday? What happened? Not feeling well. Sit down. Standard answer. You are missing PGBP head. God is going to save you for your exams. Sanjana, where are your friends? Coming. Too much traffic, no? Got the answer? Good. Tomorrow, shall we keep the lecture late? We'll end late also. Why then? Why you all come so late every day? Huh? You all cannot be on time. 10-15 minutes here and there is okay. But coming after half an hour, 45 minutes, what is this? So it is better to keep lecture late, till late. The timing is fixed because you all have college in the evening and you don't come on time. So max to max 15 minutes I'll, forgo from tomorrow. Otherwise, sit outside only. If you are coming late, no, then sit outside for 45 minutes, 50 minutes at least. Or for one session, I'll make you sit outside. Or come after the breakfast and first session only. Garden or what? Whenever you'll want, you'll come. Whenever you want, you stay back. Be a little bit disciplined. Otherwise, you are not going to pass in your exams. Seriously, I am telling you all. Done. Question number 8. Arnav is a proprietor having how many units? 2 units. Unit A carries on specified business of setting up and operating a warehousing facility for storage of sugar, and Unit B carries on non-specified business of operating a warehouse facility for storage of edible oil. Unit A commenced operations on 1st April 2024, meaning last year. Both of you, go out. Out. Come after the first session. Go out. What is the time? Half an hour. First 2-3 days, 4 days, I have left thinking that, Kiran, stay there. that you are getting settled, and every day delay. Maximum 15 minutes I'll allow from tomorrow. Huh? Maximum 15 minutes. Beyond that, if you are coming, no, don't come. Come in the second session. Sit down. Last year, meaning previous year 24, 25, the operations were commenced. 24, 25. And it claimed deduction of 100 lakhs incurred on purchase of 2 buildings for 50 lakhs each for operating a warehousing facility for storage of sugar under section 35 AD. However, in February 2026, Unit A transferred one of its building to Unit B. Examine the tax implication of such transfer in the hands of Mr. Arnav. Do you remember yesterday we did 35 AD 7A and 7B? So this question has the implication of that particular section. So how to write down this? See, Unit A. Doing which type of business? Specified business. Unit B. Doing what type of business? Non-specified business. Now in Unit A, you acquired how many buildings? 1 building or 2 buildings? 2 buildings you acquired this year or last year? And for both the buildings, 50 lakhs was the cost. That was allowed in the last year itself. Yes or no? Now what will happen? See, building 1, cost was 50 lakhs. And building 2, the cost was 50 lakhs. Okay. Entire 1 crore. This means both the 50 lakhs, entire 1 crore was allowed. Allowed under section 35 AD in previous year 24-25 itself. Okay. Now you had to use this building for at least 8 years in that same specified business. But within 8 years, meaning in the next year itself, one of the building was transferred to, meaning in this year. So can I say any one building? It can be building 1 also, it can be building 2 also. Okay, let's take building 2. This building. In February 2026, meaning previous year 25-26, that is within 8 years. Okay, this was transferred to another business. Now here what will happen? Come on, tell me. If this thing is happening, what will happen? The above buildings were supposed to be used for specified business of Unit A for 8 years with effect from previous year 24-25. But one of the buildings transferred to non-specified business of unit B within this was supposed to be as per which section? 35 AD 7A. So this was a promise taken from you. But one of the building transferred to non-specified business of unit B within 8 years in previous year 25-26. Okay, no? Now, hence, section 35 AD subsection 7B shall be applicable. And following amount shall be what? Deemed to be PGBP income for previous year 25-26 in unit A. What is the amount? Actual cost of such building allowed under section 35 AD was how much? 50 lakhs less depreciation for the period for which it was used in specified business of unit A. That is depreciation for previous year 24-25 only. 1 year or no? So that will be 50 lakhs into how much? 10%. And that is going to give you 5 lakhs. Reduce this. This will be 45 lakhs. And this will be treated as deemed PGBP income in unit A. And further, as per the proviso, to explanation 13 to section 43(1), the actual cost of such building in non-specified business of unit B shall be as follows. What? Same thing. Copy, paste. Yes or no? Same thing you are supposed to take as what? Actual cost only. Okay. So in actual cost, we are going to take this. Actual cost in non-specified business of unit B will be 45 lakhs. And here amount treated as deemed PGBP income in unit A will be 45 lakhs. If you write your answer like this, you will get full marks. Full marks. Okay. And this type of question will come in the exam for at least 4 marks and can be asked in the exam. And this is a question which is there in your ICA study mat since a very long time. Very eager to come in the exam. They have not been asking, they are not asking these type of questions. So that does not mean that this type of question cannot come. If it comes, the questions like this will be cash marks, I'm telling you. Okay. So with this section 35D, we have finished. Now, we are going to do the other sections also. Okay. Now today, what we are going to do, we are going to finish with all the deductions and even the disallowances. And I'll try that today we are going to start with the main questions of PGBP also. Yes or no? So, the next section, deduction. Next deduction is 35D. Please read this. What section 35D says? 35D will allow you to take the deduction for preliminary expenditure. Do you know what is preliminary expenses? Preliminary expenditure. Any expenditure which is incurred either to start any business or to expand an already existing business. So for expansion also this kind of expenditure can be incurred, and for starting any business this type of expenditure can be incurred. Okay. So any expenditure which is incurred for starting the business or expanding the business is known as what? Preliminary expenditure. But all the preliminary expenditure, any type of preliminary expenditure cannot be claimed under PGBP head. Section 35D. Section 35D has specified certain specific preliminary expenditures which you can claim as deduction. And they are given in point number A, point number B and point number C. So only these type of preliminary expenditures incurred will be eligible for deduction under 35D, under the head PGBP. Now which expenditure? Expenditure on preparation of feasibility report. FR means financial reporting. Feasibility report. PR means project report. PR means project report. MSR means market survey report. So, for preparation of feasibility report, project report or market survey report, any expenditure is incurred. That particular expenditure can be considered eligible for the purpose of deduction under 35D. Apart from that, any expenditure on engineering services. So if any expenditure is incurred on engineering services, even that expenditure will be eligible. So expenditure on preparation of what? Preparation of feasibility report, project report, market survey report, or expenditure on engineering services. So usually these type of expenditures are incurred before you start a business or for expanding your business. That you will get the feasibility of the project done, then profitability, how the project is going to perform, okay, what will be the profitability, what will be the revenue, how that revenue will grow, how the profitability will grow. Okay, so that is given in the project report. Then market survey will be done. So before starting any business, if you are putting lakhs of rupees, crores of rupees to start any business or to expand any business, these type of expenditures must be incurred, because incurring these type of expenditures will allow you to know that whether I should start this business or not, whether I do this, whether I should expand the business or not. What is the feasibility? What is this project going to give me over the number of years? What is the market thinking about the business idea which I want to start or I want to expand? See, 5, 10 lakhs, 20 lakh rupees, few crores, if I'll spend in this, so I'll be able to take a proper decision. So as a businessman who is investing lakhs of rupees, crores of rupees to start any business, just imagine that I have incurred so huge amount of expenditure to start any business and commence any business without even knowing the feasibility, without even knowing the growth of this business, revenue, profits, without even having a proper idea about that. I have not done the survey of the market, and I have invested thousands of crores. I have invested hundreds of crores to start any business. And what if that business fails? I will incur heavy losses. So I should not incur heavy losses. Okay? Whether the business is feasible or not. Okay? For that, this type of expenditure is incurred. So experts are hired. Those experts will conduct all these type of activities, and those experts will submit their reports. They will prepare their reports and submit their reports to the businessman. That businessman, see, this is the feasibility of the business. This is how your business going to perform. Okay? And this is the project for which you are planning. So this will be the revenue growth. This will be the profitability. The business is going to continue for these many years. So for these many years, how much profit will be? How much profit the business will earn? This is expected to grow at this particular rate, so that a businessman can have a proper decision that whether he should start or he should stop here only. Understanding whether he should expand or he should stop here only. So for that, these reports are prepared. Okay. Now those experts whom I will hire to conduct all these activities, aren't those experts going to charge me money for that? Chartered accountants are hired to get the project report, and very lucrative area of CA practice. Very lucrative area. CA practice is, preparing project reports for different types of business. Even the banks will ask for your project report before giving you any loan to start a business. If you want to start any business, if you want to expand any business, the banks are going to ask for your project report. Based on that only the banks are going to give you what? Loan, etc. So who will prepare the project report for any businessman? A chartered accountant does that. And many chartered accountants, many CAs are in this particular field of project report, project financing and all. And they charge hefty sum of money from their clients for single project report which they are preparing for their clients. Okay. Market survey reports will be prepared by marketing experts. So, and after feasibility is identified, okay, now it is good. Now I have taken the decision that I am going to start with this business. Then I will have to identify one area. For example, I want to start a factory. So I will have to find out a land where I will be setting up my factory. Okay. Now on that land, how the factory will be constructed, what all equipments will be used, what will be the layout of that factory, how those equipments are going to be arranged, the production line, how to set up that particular production line in the factory. For that, I will require the services of engineers. So now the engineers will come in the picture. I will have to take the help of civil engineers. I will have to take the help of electrical engineers. I will have to take the help of mechanical engineers. They are going to help me to set up my entire business. But they are going to charge me for that, no? Because they are going to give me their engineering services. For that, they are going to charge me. They also charge a heavy sum of money. So before starting a business or before expanding, these type of expenditures are incurred. And usually these type of expenditures are heavy expenditures. So this will be eligible. This will be eligible as a deduction. This will be eligible as a deduction. Then after you decide that you have to start a business, okay, you took the engineering services, you got the layout and everything prepared from the engineers, then now you'll acquire the land, now you'll acquire the assets, etc. Various business, tie-ups you will do. Then you will require the help of legal experts. Those legal experts are going to draft legal agreements for you. They are going to get the assets transferred on your name. They are going to check whatever assets you are buying, land, etc. you are buying, properties, etc. you are buying for your business, whether the title of those properties are clear or not. All the legal formalities relating to the business will be done by those legal experts. So those legal experts are also going to charge you money for that. That is known as legal fees, legal charges. Various business contracts will be made. So those business contract, drafting of those business contracts, registering those business contracts. So for that the legal charges will also be paid. Those legal charges are what? They are your preliminary expense because they are incurred in connection with starting your business or expanding your business. Then if you are an Indian company, if you are along with these expenses, you are also going to also going to spend on public issue like IPO, etc. you will bring, okay, share issue expenses, debenture issue expenses, company will be formed, company formation charges, MOA, AOA charges. If you are getting capital from the market, from the public, then you will have to issue a prospectus, then making the prospectus, advertising the prospectus, issue related expense, finance related expenses. The finance which you will require to start the business or expand the business, to get that finance from the market, there are lot many other expenses like company registration. First of all, you will get the company registered, company registration expenses, then MOA, AOA related expenses, then you will issue the capital, so issue related expenses. All these expenses are also treated as what? Preliminary expense. So what type of preliminary expenditures are eligible? All preliminary expenditures will be eligible, or only these preliminary expenses will be eligible? Only these preliminary expenses will be eligible. Number 1, A. Expenses on preparation of feasibility report, project report, market survey report, as well as expenditure on engineering services. Then legal charges incurred for various business agreements and registrations. Then company formation expenses. Then MOA, AOA related expenses. Then issue related expenses. Issue related expenses will cover all types of expenses like underwriting commission, prospectus, everything will be covered in that issue related expenses. Now all these expenses are incurred. They are known as preliminary expenditure. They are eligible preliminary expenditure. So any assessee can take the deduction of this preliminary expenditure? Any assessee can take the deduction? Yes, provided that assessee is an Indian company. Or other than Indian company, the assessee is a resident. Assessee is a resident. So non-corporate resident means the assessee is not a company, non-corporate, but the assessee must be a resident. Or if the assessee is a company, then it has to be an Indian company. So any Indian company or an assessee other than a company, meaning a non-corporate, but that assessee has to be a resident. only this type of assessee can claim these eligible preliminary expenditures. So first of all, you should be an eligible assessee. Second one, to start your business or to expand your business, you have incurred any of these expenditures, which are eligible preliminary expenditures. So how much of this preliminary expenditure you have incurred? Aggregate of that amount, A, B plus C. See, if you are a Indian company, you will incur all these expenses, A plus B plus C. But if you are a non-corporate resident assessee, then you are going to incur A plus B. Expenditure which are given in C will not be incurred by you because you are a non-corporate assessee. Yes or no? So if you are an Indian company, then A plus B plus C. Aggregate amount. Yes or no? And if you are a non-corporate resident assessee, then A plus B. So this is the total amount of eligible preliminary expenditure which we are going to allow you as a deduction. But just apply some logic. These are the expenditure which you incur to start a business or expand a business. Okay. These are the expenditures which are going to start a business, or are these expenses going to give you benefit only for this year? Is the business going to run for future years also? So by incurring this expenditure, you have started a business, you have expanded a business which is going to run for many years now. And just imagine this expenditure you are claiming as a deduction from only this year's business income. Will it be a logical thing to do? So what the law says, that the entire preliminary expenditure we are not going to allow you at one go. You have to amortize. You have to amortize. Okay. How will you amortize this? How will you amortize? In 5 equal annual installments. In 5 and equal annual installments. In 5 years, you are going to take the deduction 1/5, 1/5, 1/5 amount. We are not going to give you full amount. Understanding? But wait. For that, we are also going to check whether the preliminary expenditure, the total amount incurred by you, should not be a maximum limit also. So first of all, incur the preliminary expenditure. Incur the preliminary expenditure. Total preliminary expenditure we are going to allow you. But that preliminary expenditure should not be more than a maximum limit. So there is a maximum limit also to the extent of which you can claim this deduction. If the expenditure is incurred up to this limit, full expenditure we are going to allow. But we are going to allow in 5 equal annual installments. But if the expenditure is incurred more than the given limit, only the expenditure to the extent of limit will be allowed. Excess will be ignored. Will not be allowed as a deduction. But the amount of deduction will be available in 5 equal annual installments. 1/5, 1/5, 1/5. So if you are a company, then A plus B plus C, total amount should not be more than maximum limit. Hello? So amount incurred or maximum limit, whichever is lower, that is going to be allowed. But that is allowed in 5 equal annual installments. But what if you are a non-corporate resident assessee? Then A plus B. But this also will be allowed subject to a maximum limit. The total amount or the limit, whichever is lower. But that amount will be allowed that amount will be allowed in 5 equal annual installments. So what are you going to do? You are going to do the total of all these expenses, known as total of eligible preliminary expenses. Yes or no? Total of eligible preliminary expense. Now this total will be allowed subject to maximum limit. So this total amount or maximum limit, whichever is lower. So lower of A and B. What did I say? Lower of A and B will be allowed as a deduction. But that will be allowed subject to that will be allowed in 5 equal annual installment. And first installment you are going to take in which year? First time 1/5 will be allowed in which year? The year in which the business is started, or the year in which the business expansion is done. So the year in which the business is started or the year in which the expansion is done, in that year, first time you are going to claim 1/5. Then afterwards, for 4 more years, 1/5, 1/5, 1/5, 1/5. Yes or no? So in this way, the deduction under section 35D will be allowed. So tell me, we are doing which section? 35D. Who is going to get the deduction? Only Indian company or non-corporate resident assessee. Now they are incurring what? Preliminary expenditure for starting the business or expanding the business. Yes or no? Which type of preliminary expenditure they are going to incur? A, B, C. A, expenditure on preparation of feasibility report, project report, market survey report, or expenditure for engineering services. B, legal charges for various business agreements and registration formalities, etc. Okay. C is company formation expenses. Then MOA, AOA related expenses. Then issue of capital related expenses. Yes or no? Now all these expenses are eligible. So you are going to do the total of eligible preliminary expenditure. That total will be allowed subject to maximum limit for section 35D. Subject to this limit, this will be allowed. So this or this, whichever is lower. So lower amount is allowed under section 35D. But this lower amount will be allowed in 5 equal annual installments starting from the previous year in which the business is started or expansion is completed. Yes or no? Easy or not? Now pay attention. Somebody will ask me, sir, what is the maximum limit? What is the maximum limit? So if you are an Indian company, the maximum limit is 5% of cost of project or 5% of capital employed. You can take any of these two limits, whichever is higher. So you have to take the 5% of the cost of your project, or you have to take the 5% of capital employed. So according to the law, maximum preliminary expenditure you can incur up to 5% of the cost of that project or 5% of capital employed, whichever is higher, if you are an Indian company. But if you are non-corporate resident assessee, then 5% of cost of project only. 5% of cost of project only. Yes or no? So what is cost of project? All the expenditures which you are going to incur to acquire the assets. All types of assets. Tangible, intangible, movable, immovable. All type of assets which you are going to acquire. For what? Starting the business or expanding the business. So to start the business or to expand the business, the cost which you have incurred to acquire the assets in that business. Yes or no? That is nothing but cost of project. How much your project will cost? Simple. The cost of the assets which I will buy for the project is the cost of my project. But from where will you get that cost of project? Balance sheet. So you'll have to take the balance sheet of which year? The year in which the business is started. The year in which the business is expanded. For that year, take the balance sheet. And in that balance sheet, whatever assets you have shown, which were acquired to start the business or expand the business, the cost of all those assets is nothing but cost of project. What is capital employed? From that same balance sheet of which year? The year in which the business is started, or the year in which the expansion is completed, first year, okay, no? For that year, whatever balance sheet is there, from that balance sheet, the capital employed will be calculated. What is capital employed? Issued capital plus long-term borrowings. So what is the issued share capital? And what is the long-term borrowings? For this particular business which you have started, for expansion, how much capital you have issued, how much share capital you have issued to start the business or to expand the business, how much long-term borrowings you have taken to start the business or to expand the business. Issued capital plus long-term borrowing, both you take together, it is nothing but capital employed. So 5% of cost of project or 5% of capital employed, whichever is higher. That will be the maximum limit. To the extent of this limit, your preliminary expenditure will be allowed. If you are an Indian company. But if you are not an Indian company, then if you are a non-corporate resident assessee, then 5% of cost of project. That is your maximum limit. To the extent of this limit, you can claim what? You can claim the deduction for your preliminary expense. So what will be this maximum limit? Come on, tell me. It will be 5% of cost of project or 5% of capital employed, whichever is higher. In case of Indian company, and 5% of cost of project for non-corporate resident assessee. Yes or no? Did you understand? So maximum limit of deduction under 35D, Indian company this much and non-corporate resident this much. Okay. What is the cost of project? Cost of assets. And what is capital employed? Issued share capital plus long-term borrowing. And cost of asset and the capital which is employed to start the business or to expand the business. You are supposed to take that only. Okay. From the balance sheet of the previous year in which the business is commenced or expansion is completed. That's it. This is section 35D. Now after section 35D, there is 35DDA. 35DDA, which talks about amortization of VRS compensation. Do you give VRS compensation to your employees? Yes. Sir, VRS compensation we saw in salary, no? But that is from the point of view of employee receiving that VRS compensation. Now you are not an employee, you are an employer. You are a businessman. So from your business, few employees are taking what? Voluntary retirement, because you have introduced a scheme of voluntary retirement. So under the voluntary retirement scheme which you have introduced, under that scheme, few employees in the business are getting covered. And those employees are taking what? Voluntary retirement. So on their voluntary retirement, are you going to pay them VRS compensation? Isn't it your expenditure? But that expenditure will be, try to remember, that expenditure will be future year's salary, which you are going to give at once to your employees. Because they are going to lose salary from you. Okay, no? They are going to lose an opportunity to earn salary from you. So all the salary calculated at current rate for all the future years, you are giving that salary in the form of what? VRS compensation. So are you giving the amount for this year or for multiple years? The salary is calculated at once and given in the form of VRS compensation. At once, this entire amount is calculated and given to the employee. And just imagine, this amount will not be a small amount, it will be a big amount. And that amount is not this year's salary which you are going to give to your employee. This is future year's salary which you have calculated in the form of VRS compensation and you are going to give to your employees. This should not be allowed at one go. Even this should be amortized over a period of 5 years. So even this VRS compensation will be allowed in 5 equal annual installments. Starting from which year? The year in which that compensation was given for the first time. So the year in which the VRS compensation, this expenditure is incurred, in that year you are going to get 1/5, and the remaining 4/5, 1/5, 1/5, 1/5, 1/5 you are going to get in the next 4 years. So total VRS compensation incurred in this year was 10 crores. So in this year, few employees are taking retirement, and to those employees you are going to give VRS compensation of 10 crores. So in this year you have incurred the expenditure of 10 crores. Entire 10 crore will not be allowed. Out of that, 4/5 will be disallowed. In this year only 1/5 will be allowed. So what about the balance 4/5? You claim in the next 4 years. So in total 5 years this will be allowed in 1/5, 1/5. Yes or no? So assessee can be any person, but he has to be an employer. He has framed a voluntary retirement scheme, and under this voluntary retirement scheme the employees are covered, and the employees who are covered in this scheme are taking the voluntary retirement. So if these employees in my business or profession are covered by my voluntary retirement scheme, they are taking voluntary retirement from me, so I am going to make the payment of VRS compensation. That payment is an expenditure in my business. That payment is an expenditure in my business, and for that I am going to get the deduction under section 35 DDA. How much deduction I am going to get? Entire payment? No. It will be allowed under 35 DDA in 5 equal annual installments starting from the year in which such expenditure is incurred. Now I am giving you one small question. 2 marks MCQ can be framed like this. A small case study, and based on that they are going to ask you, give the correct answer. 4 options they are going to give. You have to choose the correct option. Okay. See. In the previous year, 20-23, 10 employees took what? Voluntary retirement. 10 employees took what? Voluntary retirement. And to those employees, VRS compensation given was 10 crores. How much? 10 crores. Now, in the previous year, 25-26, meaning your previous year also, 25 employees took what? Voluntary retirement. And to these employees, you are giving 20 crores of voluntary retirement, VRS compensation. Calculate the amount of deduction under section 35 DDA. Calculate for previous year. For previous year 25-26. Seven crores. How come? Six crores. How come? This 10 crores, which was the compensation given in this year, will be allowed fully in 22-23, no? Or in 5 equal annual installments. So out of 10 crores, 2 crores, 2 crores, 2 crores, you are going to claim in 5 years. So first time you claimed in 22-23. 23, 24, 24, 25, and then this is your fourth year. So in the fourth year, out of this, are you going to claim 2 crore? Okay. Now, 20 crores was incurred in this year. Are you going to get the full 20 crores in this year? Then only 4 crores in this year. 1/5. And remaining 16 in the next 4 years. So this year, how much will be the deduction? Out of this, 4 crores, 1/5 is equal to 4 crore. This will be allowed first time, and out of this, 1/5, which is equal to 2 crore, will be allowed fourth time. Okay. Next year deduction will be 6 crores only. These two amounts will go in the next year. But remember, this will be the last time in the next year. And this will be the second time in the next year. Yes or no? Next to next year, only 4 crores. Because by then, entire 10 crores would have been allowed. So this year, the total deduction will be. So how to present this? See, in the solution now, 22, 23, 23, 24, 24, 25, 25, 26, 26, 27. Okay. 25, 26, 26, 27, 27, 28, 28, 29, and 29, 30. Here, tell me, 10 by 5 is equal to 2. Yes or no? This you are going to claim till? This you are going to claim till 26, 27, no? Hello? 5 years. But from this year onwards, you are going to get 20 by 5 also, no? Is equal to 4 crore. So now from this year onwards, you are going to get 20 by 5 also. Understanding or not? And here it will be nil, because 5 years I have already got. Okay. So tell me, in this year, how much was the deduction? This will be 2, 2, 2, and from here 6, 6, and then 4, 4, 4. This will be the deduction every year. So they can ask you a small question like this also, MCQ based. But for that, 35 DDA should be known to you. By that time, it should be remembered by you. Okay, na? Should I move? Okay. Now, after 35 DDA, we'll come to section 36. We'll come to section. Now, in your section 36, no? In your section 36, there are different clauses. Subsection 1, different clauses. Clause 1, clause 2, clause 3, likewise till clause number 16. Till clause number 16. Each clause has a specific type of expense. Each clause is telling you that you are going to get the deduction for this expense. So, this first clause will tell you that you are going to get the deduction of this specific expense. Then second clause will come. Second clause will say that any other specific type of expense. So now all the specific type of expenditures, specific expenses which are incurred for the purpose of your business or profession, those expenses are given in section 36, subsection 1. One by one, these expenses we are going to check. See, so far we have seen rent rates and taxes, insurance premium and repairs of a building used for the purpose of business or profession. That amount you can reduce out of your business income to calculate your PGBP income. That is a deduction which is available under which section? 30. Then any repairs or insurance premium which you have incurred for plant and machinery or furniture which is used for the purpose of your business or profession, even that will be allowed as a deduction. That is given in section number 31. 32 says that capital expenditures incurred for assets which are used for the purpose of your business or profession will also be allowed, but it will be allowed in small parts in the form of depreciation. So that amount also you can reduce to calculate your PGBP income. Then section 35 says that any expenditure for scientific research, whether the expenditure is revenue or capital, will also be allowed as a deduction. That amount also you can reduce out of your business income to calculate your PGBP income. Yes or no? Along with that, any donation also made by you to approved institutions for conducting scientific research, statistical research, research in social science, even that amount also can be reduced out of your business income to calculate your PGBP income. Then section 35AD, which says that from your specified business, following specified business, you can reduce the amount of capital expenditures incurred for acquiring the assets which are used for the purpose of that business or profession. But those assets can be any assets other than land, goodwill or financial instruments. Then 35D, preliminary expenditures also you can take as a deduction from your business income. Reduce that amount also. But that preliminary expenditure will not be allowed fully. First of all, eligible amount should be there. Subject to maximum limit, this will be allowed, but that will be allowed in 5 equal annual installments. So you cannot reduce the full amount out of your business income this year. Only reduce 1/5. Balance 4/5 will be disallowed right now. Balance 4/5 will be allowed in the next 4 years business income. Then 35 DDA. VRS compensation you have paid, that also you can claim as a deduction. See, whatever we are seeing, no, all these amounts you can reduce from your business incomes to calculate your PGBP income. But while reducing these items, you have to keep in mind certain things which we are discussing. That while taking this deduction, keep this thing in mind. While taking this deduction, keep all these things in mind. That's it. Otherwise, all the things, all the items which we are seeing are what? Are the amounts which you are going to reduce out of your business income to calculate your business profits, PGBP income. Now, there are certain specific type of expenses which you can incur in the course of your business or profession, and these expenses are given in section 36 subsection 1. So section 36 subsection 1 will give you a list of specific type of expenses. This expense also you can reduce. This expense also you can reduce. This expense also you can reduce out of your business incomes to calculate your PGBP income. Now, which are those expenses? You just have to identify those expenses. If you see any of these expenses, reduce this expense while calculating your PGBP income. That's it. So one by one, see the name of the expenses, but you have to be careful. You have to remember this thing while taking the deduction. You have to remember this thing. You have to take care about this item. You have to take care of this thing while calculating the deduction of this expense. So, name of the expense is given. Just reduce this amount while taking the deduction. But few important points to remember while taking the deduction. That we are going to do. And because of that, the things are not getting complicated. You are making the things complicated in your mind. Is it easy now? Are you understanding what I am trying to tell you? So, which expenses are allowed? So, section 36 subsection 1, clause 1 and clause 1b. Clause 1 says that if you have a stock, what type of stock? Stock of raw materials, stock of consumables, stock of WIP, stock of finished goods in your business. And you have taken insurance of your stock. You have taken insurance of your So will you pay insurance premium? That insurance premium will be allowed as a deduction. Done. 36 subsection 1 clause 1 is saying that you can take the deduction for insurance premium. Insurance premium of stock which is there in your business. What type of stock you can have? Raw material, consumables, WIP, finished goods, any stock in your business. Have you taken insurance? Yes. Will you pay the insurance premium? Yes. Is it your expense? Yes. We consider this expense as your business expense. Take the deduction of this expense. 36(1) over. Now 36(1) 1b says that in your business, there will be employees also, and you are going to pay medical insurance premium for those employees. So are you an assessee? Yes. In your business or profession, employees are there? Yes. For those employees, are you going to pay medical insurance premium? Yes. So even the medical insurance premium paid by you for your employees will be considered as your business expense. Take it as a deduction. But remember, medical insurance premium must be paid by way of any mode other than cash. If you will pay the medical insurance premium in cash for your employees, we are not going to allow you that amount as a deduction. So if you want to claim it as a deduction, pay the premium by any mode other than cash. So now, pay attention. 36 subsection 1. Clause 1 says that take the deduction of insurance premium on stock which is there in your business. Okay. 36 subsection 1 clause 1b says that insurance premium on medical or health insurance policy of the employees in your business or profession. So employees in your business profession, for those employees you have taken health insurance, medical insurance, and the premium of that you are paying. Isn't it your expense? Yes, this is your business expense. Claim it as a deduction. Simple. But remember, this insurance premium must be paid by any mode other than cash. Other than cash. Only then it will be allowed. Sir, can you pay other insurance premiums in your business? Can you pay insurance premium on building? Which building? Which is used in business or profession? Can you pay insurance premium on plant and machinery or furniture? Furniture in your business or profession? Yes or no? Isn't this insurance premium your expense? Yes or no? For this insurance premium, will you get any deduction? Will you get any deduction? Yes or no? Which section? 30 and 31. You have already claimed this deduction. And after claiming this deduction, you are coming to 36. Hello, sir. So for this, section 30 is there. For this, section 31 is there. Any other insurance premium you can pay? Yes. In your business, some important persons are there. A person who is very important for your business is known as key man. So you will take the insurance on his life. So that God forbid if something happens to that key man, your business will incur heavy losses. At least those losses will be recovered through insurance claim which you will get. If something happens to your key man. Key man means a person having keys of the lock. No, key man means an important person. So any important person in your business, that person can be your employee, he cannot be your employee. Any important person. Okay, that is a key man. And if, God forbid, something happens to that key man, your business is going to suffer huge losses. So let's take the insurance on the life of the key man. So you are taking, as a businessman, you are taking the life insurance on the life of another person who is a key man. And now for that premium you are going to pay. So that premium which you are going to pay on the key man insurance policy which you have taken for your key man is your business related expense. But nowhere it is mentioned, nowhere under a specific section it is mentioned. So you go and claim that as a deduction under general deduction. Section 37(1). So any insurance premium, what did I say? Any insurance premium which you have paid in your business on key man insurance policy which you have taken for key man, meaning an important person for your business or profession. So there is a key man, important person in your business or profession. On his life you have taken insurance and the premium of that policy you are paying. So that premium is also considered as your business related expense, but there is no specific section allowing you the deduction of that expense. Hence this expense will be allowed under general deduction. General deduction means 37(1). So as per 37(1), any expenditure which is not allowed specifically under specific sections, but that expenditure is incurred for business or profession, even that expenditure by whatever name called will also be allowed as a deduction. Advertisement expenses, salary to the employees, yes or no, purchase of stock in trade, then many other expenses which you incur in the course of business or profession are allowed under 37(1) as a general deduction. So with general deduction of other expenses, claim this expense also as a deduction. Understanding? So this is what I have written here. See, are you paying the insurance? Assess you are any person. Are you paying insurance premium to the insurance company? Now that insurance premium is paid on the insurance policy taken for building, taken for plant and machinery or furniture, is already allowed as a deduction under section 30 and 31. If the policy was taken for the stock in your business, then it will be allowed under specific section 36(1)(1). And if that insurance policy was taken for employees, medical insurance, then it will be allowed under 36(1)(1)(b), provided it is paid by way of any mode other than cash. Sometimes for your employees you take group insurance also. I have already told you about this. In group, for all my employees, I am paying a single premium to the insurance company. That single premium will cover all the employees in my company in group. Or sometimes it is possible that for my employees, I am taking personal accident policy on the individual name of each employee. So even that group insurance premium, which I am paying for all my employees, even the personal accident policy premium, which I am paying for my individual employees, yes or no? Even that is my business related expense. Even that can be claimed as a deduction. Yes or no? Will you remember this? So this is all about insurance premium at one place. And any key man insurance policy premium, if I am paying the premium on the insurance policy of a key man in my business or profession, then that will also be allowed as a deduction. If you see any of these insurance premium, no, go and reduce this amount out of your business income. These insurance premiums are treated as your business expenses, which you can claim as a deduction out of your business income to calculate your PGBP income. Will you remember this? Sure. Now let's come to 36 subsection 1 clause 2. Now, are you paying any bonus or commission to your employees? Is it your expense? Claim this expense also as a deduction. But this will be allowed subject to 43B. Do you remember 43B I told you? even if you are following mercantile basis, even if your PGBP is to be calculated on mercantile basis, all the business income on mercantile basis, all the business expenses on mercantile basis, but few expenses can be claimed only on payment basis. You have to make the payment of those expenses in this year or at least on or before the due date of filing ROI of this year. Only then those expenses will be allowed as a deduction out of this year's business income. But if you fail to make the payment of these expenses on or before the due date of filing your ROI, then as per 43B, these expenses will be disallowed. Will not be allowed as a deduction out of this year's business income. It will be allowed as a deduction out of the business income of that year in which they are actually paid. So bonus and commission is one of those expenses which is allowed subject to 43B. 43B I have also told in section 30, if you remember. Rates and taxes of the building is also allowed subject to 43B. Now this is the second expense which is allowed subject to 43B. Bonus and commission. Till the time you will not pay the bonus and commission to your employees, it will not be allowed as a deduction. So this year's bonus and commission must be paid in this year or at least on or before the due date of filing ROI of this year. Then only this year's bonus or commission will be allowed as a deduction out of the business income of this year. But if on or before the due date of filing ROI of this year, the bonus or commission is not paid, then 43B will be attracted and the bonus or commission will be disallowed. This year you cannot claim it as a deduction. You can claim in the year in which you actually pay, but not in this year. So, are you an assessee? Any person doing any business or profession? In your business or profession, employees are there. Whatever bonus or commission you are going to give to your employees is also your business expense. Claim it as a deduction. But you will claim it only subject to 43B. Understanding? Even if you are following mercantile system of accounting, this year's bonus, this year's commission, you cannot claim on due basis. No, you have to actually pay on or before the due date of filing ROI for this year. Only then it will be allowed as a deduction from this year's business income. Will you remember this? Sure, everyone? Now, if the assessee is a company, now see, I'll give you one case. Okay, now tell me if company is there. Okay, and this Raju is the employee in the company. Raju is the employee in the company. And Raju is also holding some shares in this company. Is it possible that the employee can have the shares of the same company in which he is an employee? Can he be the shareholder also of that company? So now what is happening? See, Raju is an employee, and along with being an employee, he is also a shareholder in that company. So now, if the company gives what? If the company is giving dividend, if the company is giving dividend to all the shareholders, so Raju was also one of the shareholders, so Raju is also going to get the dividend. For Raju it is an income. For Raju it is an taxable under the head IFOS. Taxable under the head, and at what rate? Normal rates. Dividends are not special incomes, they are normal incomes. Taxable at what rates? Normal rates. So is Raju going to pay tax on that income? Yes. At what rates? Normal rates. Because this is Raju's IFOS income. For Raju it was an expense, but for the company it is an expense, no? You resign seriously from CA. Dividend is an expense. expenses are always above net profit. And dividend is never above net profit. After the net profit, it is a part of P&L appropriation. So your profits are being appropriated. Once you earn profit, out of those profits, the profits are distributed to the shareholders in the form of dividend. This is not your expense. For a company, this is not an expense. What is this? For a company, it is appropriation of, and for that appropriation of profit, no deduction is allowed to the company under the head PGBP. Company can claim the deduction for business expenses out of business income. So company's business income minus company's business expenses. But the company cannot reduce this amount as a business expense because this is not an expense. This is appropriation of profit. Anything above P&L net profit is expense. And anything after net profit is calculated is appropriation of net profits. Transfer to reserves, then dividends, all those things. Getting my point? So now tell me, is the company going to get any deduction for this dividend? So now company applied some mind. Company told Raju that, Raju, you are my employee also, no? Raju, you are my employee. So we are not giving you dividend. But the amount of dividend which we wanted to give you, we are going to give you in the form of what? Bonus or commission. Because you are our employee also. So that same amount of dividend which I was supposed to give to Raju in the capacity of a shareholder, yes or no? That same amount is given to Raju in the form of bonus or commission. Will it make any difference in the hands of Raju? Still it is an income for Raju. But now this income will come under the head salary instead of IFOS. And on that, Raju is liable to pay tax at normal rates only. So earlier also the income was taxable. Now also the income is taxable. Earlier also it was taxable at normal rates. Now also it is taxable at normal rates. Earlier it was shown in separate head. Now I am going to show in separate head. It is not going to make any difference to Raju. But it is going to make a huge difference to the company, because now the company will say that this is my business expense. 36 subsection 1 clause 2, I am going to take the deduction. Any company doing such things, paying the bonus or commission like this, cannot claim such bonus or commission as a deduction under the PGBP head. If the bonus or commission is given to an employee who was also the shareholder in that company in lieu of dividend, then that bonus or commission cannot be claimed as a deduction. Will you remember? Bonus or commission in every other case we are going to allow, no? Subject to 43B. But if you are going to give the bonus or commission in lieu of dividend to that employee who was also the shareholder, that dividend we are not going to allow. Sorry, that bonus or commission we are not going to allow. That will be disallowed. Will you remember this? Sure. 36(1)(2) is over. Now let's come to 36(1)(3). Important. Now see, if I am saying that you are an assessee, okay, no? Assessee, can you be any person? Assessee is any person. Now assessee is doing any business or profession. So assessee is doing any business or profession. Now to do this business or profession, assessee needs fund. on a regular basis. Sometimes working capital is required. Sometimes some asset is required. Yes or no? So to do this business or profession, funds are always required. But sometimes there is a shortfall of funds in the hands of assessee. So he has to take the funds to do his business or profession, to do the activities in the business or profession. So he'll have to take the funds as loan from outsiders. So can the assessee take a loan? Loan for the purpose of his business or profession? Loan will be taken from a person, and that person is known as lender. The person lending you money is a lender. Yes or no? Now to this lender, are you going to pay interest on that loan? The interest is given on the loan which you have taken for the purpose of your business or profession. The loan can be long-term loan. The loan can be short-term loan. It can be overdraft. It can be cash credit. It can be any type of loan. Yes or no? So the loan you have taken for the purpose of business or profession, meaning that the amount of that loan, the capital which you have borrowed from the lender, that capital is being used in the business or profession. Now on that capital which you have borrowed and which you have used for the purpose of your business or profession, are you going to pay the interest? That is an expense related to your business. Take the deduction of this interest also. 36(1)(3). So can you take the deduction of this interest? This interest is also what? Allowed as a deduction from your business income. Reduce this interest also as your business expense. We are going to allow the deduction for this interest also. Understanding? But this interest will be allowed subject to 43B if the lender is a specified lender. Which lender? Specified lender means public financial institution or state finance corporation or state industrial investment corporation or any scheduled bank or cooperative bank, or any banking NBFC, deposit taking NBFC. Yes or no? Known as banking NBFC, also known as deposit taking NBFCs. So have you taken loan from any public financial institution? Hello? Have you taken the loan from state finance corporation? Have you taken the loan from state industrial investment corporation? Or you might have taken loan from any scheduled bank or a cooperative bank or even specified NBFCs. On this loan, whenever you will pay the interest, that interest will be allowed subject to 43B. That interest will be allowed as a deduction because that interest is on a loan which you have taken for the purpose of business or profession. But that interest we are going to allow subject to 43B. This interest cannot be allowed based on method of accounting. This interest will be allowed subject to 43B. Pay in this year or on or before the due date of filing ROI of this year. Only then this interest will be allowed as a deduction. If the due date of ROI is gone and this interest is still unpaid, then from this year's business income you cannot claim the deduction of this interest. This interest will be allowed as a deduction in the previous year in which it is actually paid. In that year it will be allowed as a deduction, not from this year's business income. That is 43B. So subject to 43B, you claim the deduction of this interest. Yes or no? But wait. Now can I say the lender is not a specified lender? Possible. You have taken a loan from any other person. On that loan, will this interest be allowed as a deduction? The answer is yes. It is still your business loan. And on business loan, whatever interest you are giving, that is your business expense, has to be allowed as a deduction. There is no requirement that you have to take loan from these lenders only. You can take the loan from any lender. And on that loan, interest we are going to allow. But now that interest will not be subject to 43B because the loan is not taken from specified lender. Even that interest is also going to be allowed. So, interest on business loans will be allowed as a deduction, whether the loan is taken from specified lender or any other lender. Yes or no? But that interest will be allowed subject to 43B if the loan was taken from specified lenders. If the loan was taken from other lenders, then the interest will be allowed based on method of accounting and not subject to 43B. Understanding? Hello? Now, tell me one thing. You have taken a loan to acquire any asset. In what? Business or profession? Possible or not? Isn't it your business loan? Yes, this is your business loan. On this loan, are you going to give interest? Are you going to give interest? But interest from date of borrowing till date when asset is put to use. Don't you think this interest is already added to what? Actual cost of asset? We have already seen this yesterday only when I was explaining 43.1, explanation 8, 9 and 10. In that explanation only I have told you. Any interest on this loan which you have taken to acquire a asset in the business or profession. On this loan, what did I say? On this loan, whatever interest you have paid from the date of borrowing till the date when the asset is put to use, that interest has to be capitalized. That interest has to be added to the cost. So you already added this amount of interest to the, can you claim this interest under section 36(1)(3)? This interest cannot be allowed under section 36(1)(3). Why? Because double deduction will happen, no? Once you have added in the cost, will be allowed as a cost of asset in the form of depreciation. And second, you are going to take as a deduction separately also. Not allowed, no. Separately you don't take. Add it in the cost, will be allowed in small parts in the form of depreciation. Will be allowed as a cost of asset. Yes or no? This you cannot claim separately. But any interest on this loan after the asset is put to use. So when the asset is put to use, after that date, whatever interest is there, that interest you can claim under section 36(1)(3), because that was not capitalized. That interest is not capital in nature, that is revenue in nature, and this interest can be taken as a deduction under this section. From your business income of this year, you can take the deduction of only this interest. Any interest prior to the date on which the asset was put to use cannot be allowed as a deduction under 36(1)(3), because it is already added to the cost of asset. Understanding or not? Sure. So this was the interest for you. This was the interest. Please see this. Read this entire part. Done. Now that same loan can be taken from any other lender. On that loan, interest will be paid. Will that interest be allowed? Sure. Sure. Subject to 43B, no? See this. This will not be allowed subject to 43B, but this will be allowed based on method of accounting. So if you are following mercantile system, claim this interest on due basis. If you are following cash system of accounting, claim this interest on cash basis, payment basis. Yes or no? Next one. Loan taken for acquisition of any asset for business or profession. On that loan, interest is given from date of borrowing till the date on which asset is put to, shall not be allowed under this section. Why? Because it is already added to the actual cost of this asset as per the explanation to section 43(1). Now any interest with effect from the date on which the asset is put to use, which was not added to the cost, will only be allowed as a deduction under clause 3. Done, sir? Sure, sir? Now read this part. What did you understand? You are an assessee running your own business. You are an individual assessee. You are not a partnership firm. You are not a company. You are not AOPBY. You are an individual assessee running your own business or profession as a sole proprietor. So in your business, will you invest capital? Yes or no? And while making the books of accounts, you might have done the final accounts of individual sole proprietors. Yes or no? In your standard 11th, 12th, you have done the accounting of sole proprietors. How do you do that accounting? If you remember there, you make a P&L. In that P&L, you also debit the interest on capital at 6% per annum. That is not the actual interest which is given to the sole proprietor by the business, but just for the sake of accounting, you have to show that interest also as a part of your P&L. So in your P&L account, you have shown interest on capital. What is that? Real expense or an imaginary expense? Only the accounting entry. And bloody in your P&L account, if you have debited this type of interest is reduced to calculate your net profit. Tell me, is it your real expense? As a sole proprietor, are you going to give this interest to anyone else? Or this is still with you? So if the amount is not going out of your hands, out of your pockets as your expense, how do you expect us to give the deduction of this type of expense? This is not a real expense. This is a notional expense. Will not be allowed as a deduction. So if P&L is given for any sole proprietor, and from that P&L, net profit is there. From that net profit, you are going to calculate what? PGBP income. So in that net profit, this interest was also reduced. Should this interest be allowed or it should be disallowed? Add it back. Add it back to your interest because this was not your expense. This should not be allowed as a deduction. Understanding or not? So if any assessee who is a sole proprietor in his own business or profession has invested what? Capital, meaning the business or profession has taken a loan only. But in accounting terms, if you will see, business is separate and sole proprietor is separate. But in taxation, business and sole proprietor are not separate. They are one and the same entity. So how can you bloody give interest to yourself out of your own business? And even if you are giving and you are showing in your P&L, that is merely an accounting entry. That is not your real expense which you are incurring. So if debited to P&L, interest on this capital, if debited to P&L, is not your real expense. We are not going to give you any deduction for these type of interests, notional amounts, notional expenses. This type of interest cannot be claimed as a deduction. It will be completely disallowed. Understanding? Yes or no? Next one. What is this? Read it. You have taken a loan for business or profession. Assessee is any person, okay, no? Now this assessee is taking loan for business or profession from any lender. Now on this loan, if the assessee is giving what interest, that interest we are going to allow here. But sometimes while taking this loan, you have to pay other expenses. You have to incur other expenses also while taking this loan, like commission on brokerage, loan processing charges, etc. When you will apply in the bank to get the loan, your loan application will be processed by the bank. The bank will charge processing charges, loan processing charges. If you have taken the help of some expert to get the business loan, that expert is going to charge you commission or brokerage so that he can arrange maximum amount of loan at a minimum possible rate for you with less documentation and proper documentation. Because see, you want to focus on what? You want to, in big organizations, what happened, no? Big businessmen and the banks. Banks are always interested to give higher loans, big amount of loans to big businessmen. And big businessmen will take the loan in huge amount so that the interest will be coming in huge amount to the bank. Usually corporate loans and everything is there, no? So there are brokers who actually introduce banks to the big business houses. Like very big companies there, one very big assessee is there doing businesses, huge businesses. And that businessman wants to take the loan from bank. But all the banks will be very much interested to give the loan to this big businessman because 1,000 crore rupees of loan is required. How much loan? 1,000 crores. So now this 1,000 crore of loan given by any bank, the bank is going to earn a very decent and very, huge amount of interest as their income. So every bank will be behind this type of businessman. And different banks will offer different types of benefits. That take the loan from us, we are going to give you longer repayment tenure, we are going to give you less rate of interest. But see, businessman is not going to directly go to these type of banks. That morning he will leave from the office, go to different bank, ask for loan, I want 1,000 crores. No, the businessman will not go. Somebody as a broker will introduce this businessman to the bank people. So this person who is a broker, will have contacts in all the banks, different banks. And he will have the contact with this type of businessman also, big shots. So now big shot and the bank. Who is in between that? Brokers, agents. They introduce both these parties. He will have a word with this businessman also and he will inquire that if he requires loan, okay, what type of loan he wants, how much amount of loan he wants, how much rate of interest this particular fellow, this businessman wants to pay. Now this broker has contacts in banking industry also with different banks. He has a contact in Citibank, he has a contact in HDFC Bank, he has a contact in ICICI Bank. At both the places he will earn some commission. From banks also he will get commission and from this businessman also he will get the commission because he will get this deal fixed between the lender and the borrower. The borrower will take the loan from the bank. Which bank? He will introduce to different banks, and he will do the broking so that this particular businessman gets maximum possible loan at minimum possible rate. So for that he is going to charge what? Charge commission, brokerage from this businessman. So are you a businessman? Yes. To take a business loan, have you paid brokerage, commission, etc.? Yes. And once you apply in the bank, you will have to pay the loan processing charges also. So are these expenses related to this same loan? Yes or no? But these expenses are not allowed as a deduction under this clause. This clause will allow you the deduction only for interest on this loan. So any interest if you pay on this loan, we are going to allow you as a deduction under clause 3. But any other expenses like brokerage, commission, processing charges on that same loan, we are not going to allow you as a deduction under clause 3. Why? Simple. These are the expenses which are not in the nature of interest. And we are going to give you the deduction only for interest under this clause. Are these expenses in the nature of interest? No. So we are not going to allow you this. But still, these are the expenses related to this loan taken for the purpose of business or profession. These are still your business expenses. Are you going to get the deduction for these expenses? Yes. General deduction. 37(1). But not under clause 3. So if you see any of these expenses, even these expenses you can reduce while calculating your PGBP income. Even these expenses are also allowed as a deduction. But while taking the deduction, don't quote 36(1)(3) because under clause 3 they are not allowed. They are allowed under 37(1). General deduction. All other business expenses are allowed under 37(1). With those expenses, this expense will also be allowed. But you cannot claim under clause 3 because clause 3 is going to give you the deduction only for interest on these business loans. Yes or no? Hello sir? Done? Now pay attention. Now this point. I am going to discuss this point with you. Assessee is any person earning what? Salary, house property, PGBP, capital gain, IFRS. 5 heads. Income under 5 heads is earned. On each income he has to pay what? Income tax. Is he going to pay income tax on salary? Yes. Is he going to pay income tax on his house property income? Is he going to pay income tax on what happened to this? It's off now. Now? It's on now? That is also off. You want me to switch it on? Take it. Return it, huh? Give it back. Come. No need to take it to your PG. Okay. See, on all the incomes, are you going to pay income tax? Tell me yes or no. Sure, no? Salary income, you will pay income tax on salary also. House property income you are earning, you are going to pay tax on your house property income also. So this is a tax on your salary income, this is a tax on your house property income, this is a tax on your PGBP income. Now see, any tax any income tax which you pay, the income tax is paid in different ways. Some income tax you pay in the form of TDS, TCS. Some income tax you pay in the form of advance tax. Some income tax you pay in the form of self-assessment tax. So these are the various ways in which your income tax is paid. So if you see any of these words, meaning that it is your income tax only, you are paying in the form of TDS, TCS. It is your income tax only which you are paying in the form of advance tax. It is your income tax only which you are paying in the form of self-assessment tax. So I am talking about your income tax. Tell me one thing, if on any income you are paying income tax is your expense or it is not your expense? Expense. Now that expense should be allowed as a deduction or it should not be allowed as a deduction. Assessee will definitely ask for deduction. Why? Out of my salary income, whatever income tax I have paid on the salary income, give that deduction for that income tax out of my salary income. On my house property income also, I am paying income tax. So this is my expense. Give me the deduction of this income tax out of my house property income. On capital gain or income also, I have paid what? Income tax. Give me the deduction of this income tax. Bloody, if we have to give you the deduction for income tax, why are we charging income tax then? Under the entire Income Tax Act, what did I say? Under the entire Income Tax Act, no section allows you the deduction for expense known as what? Income tax. You cannot claim deduction for income tax paid by you under the Income Tax Act from different incomes. Bloody, from income, if we are supposed to give you the deduction of income tax paid on that income, why are we taking income tax only then? If we have to give you the deduction for that. So no deduction under Income Tax Act, under any of the provisions is available for income tax which are paid on your incomes. By whatever way. Yes or no? So whenever you see income tax payment in the P&L account, that is your expense. But will it be allowed as a deduction under PGBP head? No, not allowed. Now, sometimes what happens, that see, if you pay income tax on your profits of the business, you are doing a business. In the business, you are earning profits. On those profits, the income tax is charged. Because the charge is on the profits of the business. Income tax is a charge on the profits of the business. You might tell the government that government, see, this is not my personal income tax liability. This is the income tax liability of my business. This is not my personal expense. This is an expense of my business. You might give this kind of argument that any income tax paid on the profits of my business is my business expense. I should get the deduction for that. Are you going to ask for that? Yes. The moment you will ask, we will say 48(2) disallowed. Under the head PGBP, there is a specific disallowance under section 40, clause A, subclause 2, which says that any tax on the profits of your business, any income tax, usually income tax is charged on what? Profits of your business only. Yes or no? Which income will be charged under the PGBP head? Profits, no? So the tax, income tax is a tax on profits of business. And if it is a tax on the profits of the business, it does not mean that it is your business expense. We are going to allow you that. 40 clause A subclause 2 specifically says that any tax on the profits of your business, any income tax on the profits of your business shall not be treated as your business expense. We are not going to allow you that as a deduction. Why? Simple. If we allow you this here, every assessee will start asking for the deduction for their income tax. Even the persons earning salary will ask for the deduction. Even the persons earning house property income will ask for the deduction. Because if it can be given on PGBP income, profits, then why not on salary? Then why not on house property and other heads? Yes or no? So remember, we don't want to allow any deduction for income tax. So first, what are we doing? We are disallowing the expense known as what? Income tax on the profits of the business or profession. Even if it is a tax on the profits of your business or a profession, still it will not be treated as your business expense and it will be disallowed. It is written in 40A2. And if we are disallowing here, hence it will not be allowed under any other heads also. And that is the reason why you did not see deduction for income tax under any of the heads. Under section 16, deduction is available from salary income. Under section 16, did you see any deduction for income tax over there? No. Deduction under house property is available under section 24. Did you see any deduction for income tax over there? No. You are not going to see it in capital gain also. You are not going to see it in IFOs also. Then how can we allow under PGBP? Understanding? So income tax is your personal liability, boss. Even if it is paid on the profits of the business or profession, no. You cannot treat this as your business expense and claim it as a deduction. We are specifically disallowing you. Why? Because income tax is a personal liability. Income tax is a personal liability. It is a tax on person's income. It is a tax on person. It is not a tax on business. Tax on business is GST. Tax on business is customs duties, import duties. Yes or no? The taxes which you pay in the course of your business or profession are allowed as a deduction. But income tax which you pay on the profits of your business, we are not going to allow. GST, can you take the deduction of GST? Yes. Can you take the deduction of customs duty? Yes. Can you take the deduction of import duty, professional tax, etc.? Yes. All the taxes which are paid in the course of business or profession, because you are doing this type of business or profession, hence you have to pay these type of taxes. Then take the deduction of those taxes. But if you are paying that tax in the form of income tax on the profits of the business, that we are not going to allow, because we don't consider this as a tax on profits. We consider this as your personal tax, personal liability. And a personal liability can never be treated as business expense. Understanding? Sure. Now, income tax is a personal liability, huh? Because it is a tax on income of the person. It is a personal liability. So, person, income tax is your liability. Person, income tax is your personal liability. Now, you don't have money to pay income tax. You don't have money to pay. So you took a loan to pay that income tax. Possible. And on that loan, if you are paying interest, that interest will be allowed as a deduction under PGBP head as interest on business loan. Or not? No. Because the loan is taken to pay what? Income tax, which is your personal liability. So even if in any business the loan is taken, hello, even if in any business the loan is taken to pay the income tax on the profits of that business, yes or no? On that loan, any interest paid will not be allowed as a deduction. Not under this section also, not under other sections also. Because that is a interest, that is an interest which is paid on the loan which you have taken to pay the income tax. And income tax, by the way, is not your business liability, it is your personal liability. Understanding? So that interest will be allowed or will not be allowed? Why? Because the loan itself is not a business loan. Loan is a personal loan. Any loan taken to pay income tax is a personal loan, not a business loan. So loan taken for payment of is not a, it is a personal loan. On that loan, whatever interest will be paid will be disallowed. Understanding or not? See, for interest, every possible discussion I am doing there. 36 subsection 1 clause 3 is over. I have already explained 36(1)(3), but along with 36(1)(3), other interest also I am discussing here, so that all the interest at one place you get. Understanding? So first of all, tell me, are you taking a business loan? Are you taking a business loan? From whom? Any lender. If the lender is a specified lender, from that lender you have taken a business loan, on that interest will be paid, will be allowed as a deduction, subject to 43. But if the loan is taken from any other lender, if the business loan is taken from any other lender, on that business if interest is paid, even that interest will be allowed as a deduction, but based on method of accounting, not subject to 43B. Okay? Important point. Any interest given on the loan taken for acquisition of asset up to the date when the asset is put to use cannot be claimed here because it is already added to the cost. Understanding? Only that interest can be allowed under this clause, which is paid on or after the date when the asset is put to use. Only that interest will be allowed here because that was not added to the cost of asset. Here your 36(1)(3) gets over. Here your 36(1)(3) gets over. Now whatever discussion I am doing now after this is an extra discussion, because the examiner is not going to ask you this much only. He is supposed to put you in troubles. What type of troubles he can put you in? Such type of case can be given in the exam. What are you going to do? If I am not going to explain this, you will never know that these type of things do exist. And the examiner also tests all these things. This is nowhere written in the law. But these type of things, the examiner many times asks in the exam. What are you going to do in that case? You are not going to apply your logic, because you have never trained yourself to apply your logics. Whatever is told in the class, whatever he is saying, that only we are going to do. That's it. You will not apply your mind only. And if in the exam such kind of things will come, what are you going to do? You will sit idle. You will not be able to, hold your pen also. You will not be able to write anything. So it is my duty to explain you all the other things also along with this, which can be tested in the exam. These things are done and done properly and remembered, no, only then difficult to difficult paper also you can attempt with confidence. Otherwise, you will say that everything is coming out of syllabus. Nothing is out of syllabus. Everything is there in your syllabus. So tell me, if you are a proprietor in you have any business or profession, so you are a sole proprietor. Have you invested capital in your business? That is as good as loan taken by your business from you. On that loan, is the business giving you interest? But that interest is not your expense. How can your business only give you interest? So that interest which is given by the business to the sole proprietor is not an actual expense. It is just an imaginary expense, notional expense, and just debited to P&L account. Cannot be allowed as a deduction. Disallow. Ignore that interest. That will not be allowed as a deduction. So from your business profits, if you have reduced this, this should not be reduced. Add it back. Understanding? Next one. If you have taken loan for the purpose of business or profession, and on this loan, if you are making the payment of other expenses like commission, brokerage, and processing charges, etc. These expenses are not in the nature of. So they are not going to be allowed under the head PGBP. Or they are going to be allowed. They are going to be allowed because they are your business expense. Any expense on this type of loan will be a business expense only. So even this is your business expense because these are the expenses incurred for that loan only, which you have taken for the purpose of business or profession. But since they are not in the nature of interest, they cannot be claimed under clause 3, but they are supposed to be claimed under PGBP head as a general deduction because they are also your business expenses only. Yes or no? Next one, if you pay income tax in whatever way, TDS, TCS, advance tax, self-assessed tax, whatever ways you pay your income tax, will you get any deduction for your income tax under any of the heads? None of the heads, income tax will be allowed. Income tax is not an expense which you can claim as a deduction from your incomes. So, salary, house property, PGBP, capital gain, other sources, from any of those incomes, you cannot take the deduction of income tax as your expense. It is not allowed. Not even under the head PGBP. Even if the income tax on the profits is charged, income tax is charged on the profits of the business, still that income tax cannot be taken as a deduction. Why? Because it is disallowed as per 40A2. This is not your business expense. This is your personal liability. Income tax is a tax on the income of a person. So it is a personal liability. Even if it is charged on profits of the business, still you cannot call it your business expense. Still you cannot claim it as a deduction. Hence it is completely disallowed as per 40A2. Now since it was your personal liability, to pay this personal liability you might have taken a loan. That loan does not become a business loan, and if the loan is not a business loan, interest on that loan cannot be claimed here. It can be claimed under other heads. No, it cannot be claimed only. Neither the income tax will be allowed as a deduction, nor the interest on the loan taken to pay that income tax will be allowed. Income tax completely ignored, and interest on the loan taken to pay the income tax will also be completely ignored. Both the things are never allowed as a deduction under any of the provisions of Income Tax Act. Yes or no? Now, sometimes you have to pay interest as per the various provisions of Income Tax Act also. You have delayed in filing the return. So for delay in filing of return, interest is charged. You have not calculated your advance tax installments properly. There was a shortfall of payment of advance tax, or advance tax is not paid only. Then for that also the interest is charged under the Income Tax Act 234B. Advance tax installments are to be paid. Advance tax has to be paid in 4 installments. If there is a default in any installment, then for that also under the Income Tax Act an interest is charged 234C. For being an assessee in default, there is an interest which is charged under 201. So if there are different types of interest which are charged under the Income Tax Act, so are these interest charged as per Income Tax Act? Hello? Should you get the deduction for these interest? Because they are charged as per the Income Tax Act? No sir, they are charged as per the Income Tax Act. So I should get the deduction, no? One tight slap. Bloody, for these interest, if you will get the deduction, will you file your return on time? Will you follow the provisions of Income Tax Act? This is as good as a penalty for you. Never allowed as a deduction. And if bloody we have to give you this interest as a deduction, why are we taking this interest from you under the Income Tax Act? Yes or no? So any interest which is paid as per the provisions of Income Tax Act, even for those interest also, no deduction is available. Ignore those interest also. Yes or no? Now, interest on late payment to suppliers or other interest payable in the course of operations of business or profession. Those interest are your business related expense. Those interest we are going to allow, but not under clause 3, because this interest is not interest on loans. Under clause 3, only the interest on business loan will be available. All other interests which are related to your business or profession, we are going to allow them, but not under clause 3, under the general deduction. Yes or no? Now, sometimes interest, penalties, fines are paid for contravention of business contracts. So they are going to be allowed, because that is for contravention of business contract. For example, you have entered into a business contract with me. You are a buyer, I am a seller, or you are a supplier, I am a buyer. Yes or no? So we have a business relationship. So in our business relationship, we have entered into a business contract. So if you or myself, any of us, contravenes any of the provisions of the business contract, we might have to pay interest, penalty, commission to each other. And these type of things keeps on happening in every business, every profession. Yes or no? So this is an expenditure relating to your business or profession. We are going to allow you this, because in every business, this type of things are going to happen. This type of expenses are going to happen. Normal phenomenon in any business, any profession. Entering into contracts, business contracts, yes or no? Not following the terms of the contract. As a result of that, interest will come, penalties will come, fines will come. Those interest, penalties or fines are for contravention of business contracts. Normal, happens with every businessman, every professional. We are going to allow you that. But if, remember, if interest, penalties, fines, etc. are for contravention of any rules, regulation or law, they are always treated as penal in nature, will never be allowed as a deduction. Contravention, for contravention of any law, rules or regulations made by the government, made by the authorities. If you will not follow this law, this much penalty will be charged. If you will not follow this provision, this much fine, this much interest will be charged. So these are penalties. These are charged in the form of penalty. These are penal in nature. So if their nature is penal, means the government wants to penalize you. And penalize you why? So that you don't do this again. For example, SEBI law is there, you know. If you do insider trading, no. So as per the SEBI law, what happens? Penalty is charged. You can also go to jail or as per SEBI law. So there is a law, SEBI law. Okay. And if you contravene the provisions of SEBI law, one of the provisions is that you cannot do insider trading. If you have any time sensitive or very sensitive information of the company, based on that you cannot, you or people like you cannot do the trading to take the undue advantage of that situation. Yes or no? So insider trading is not allowed. But knowing that insider trading is not allowed, you are doing insider trading and SEBI caught you. SEBI will put heavy penalties, heavy fines on you. So that heavy penalties, fines, etc. are charged for what? Contravention of any law, contravention of any rules, regulation. That will not be allowed as a deduction. Understanding? Any law, any rule, any regulation, the provisions are not followed, and for that a penalty is charged in the form of interest, penalties or fines will not be allowed as a deduction. But sometimes penalties and fines are not in the nature of penalty. They are compensatory in nature. They are, then those interest, penalties and fines will be allowed. Best example is GST. GST payment. Sometimes what happens, see, every month GST payment you are supposed to make in the next month on or before 20th. So on or before 10th you are supposed to file your GST R1 return. And then after 10 more days, on or before 20th of the next month, you are supposed to file your GST R3B. And you are supposed to pay the GST amount for this month. Yes or no? But what if you delayed by 5 days. Did you make the payment of GST? Yes, but you delayed by 5 days. So for the delay in 5 days, extra interest they will charge. So along with GST, they are going to take some interest amount also. That interest is not penal in nature. That is compensatory in nature. The government is asking that interest in the form of compensation. That since you have deposited your GST late, the government lost its interest, so you give the interest to the government. That is compensatory in nature. That is not to penalize you. So that interest can be claimed, very well claimed, as a deduction. Because that is not penal in nature. This is a court judgment. But if interest, fines, penalties are penal in nature for contravention of any law, rules, regulation. For example, GST law is there which says that you have to take registration if you cross threshold. What is the threshold? 20 lakhs. So if your turnover in this year exceeds 20 lakhs, immediately within 1 month you have to take registration. Yes or no? You have not applied for registration knowing that your turnover is more than 20 lakhs. This is a contravention. And for that, any interest, fine, penalty is charged, no? That will not be allowed as a deduction. Are you aware that you have taken GST, taking our name? From everyone, every customer you are charging GST, and that GST you are supposed to pay to the government. You have not paid the GST only. This is contravention. For this, if any penalty, fine, interest will be charged, then it will be disallowed. But if the interest is in interest, fines, etc. is compensatory nature, then they will be allowed as a deduction. Will you remember this? This is the end of interest. This is the end of interest. Now from clause 3a, we are going to start after the break. Okay? Take a small break.